Welcome back to Indianomics. This is a consumer sector special. I have been speaking with Mr. T.T. Jagannathan of TTK Prestige, Atul Lall of Dixon, Anuj Poddar of Bajaj Electricals and Akshay D'Souza of Bizom, the market research company. Gentlemen, thank you very much for your patience. What we have gleaned so far is that May and June have not been very significant or not very flattering for consumer durable consumption. It could have been overstocking in the earlier quarter, or it could be that the consumer is still in pain. Rural demand still tentative from what our guests have told me, but very good demand for washing machines, Mr. Atul Lall says, at Dixon, and the wearables segment doing exceptionally well. Premium products doing better than mass products, Mr. Jagannathan told us. Mr. Jagannathan, now going forward, is there a possibility of better margins for companies, or do you think raw material prices will mostly get passed down in the form of lower product prices?
No, we don't propose to pass down any price advantages that we've got in raw materials. And the margins, we always say, it's between 14 and 16% EBITDA, and we'll maintain that.
Okay. Any other fine points in terms of festive demand? Does your demand, is there any early signs of people stocking up, asking you for products ahead of Ganesh or ahead of Onam?
No, I agree with Mr. Poddar. The tertiary demand is starting to pick up, and we can see that in the market. Primary is yet to follow. I think it will follow in Q2.
Okay. Mr. Lall, what's the experience with you? Is it more premium products that are people are having an understanding? Yours is a B2B business. So where are the trends looking like? Is it more in premium, or is it not so much in premium?
So undoubtedly, last 3-4 quarters, the main sales and growth was coming from premium products.
Okay.
Like in television, what was selling more was ultra high definition, 65 inches. Same was the case in mobile phones. This was higher end 5G phones. Mm-hmm. That was a shift. But as I shared with you, in the last 4 to 6 weeks, I'm seeing that the mass products are coming back, which is a positive for us because we always like to build a large scale. Mm-hmm. So I can see that it's coming back a bit.
Mm-hmm. Would you see an expansion of margins?
Well, definitely the commodity prices have softened, but please appreciate that we are a B2B company, and largely it's a pass-through for us. And our operating margins are in the range of 4.5 to 5%. That's the nature of this business.
Yes.
But certain products like televisions, in fact, it's the other way around. In most of the other products, the commodity prices and the component prices have declined. But in televisions, the prices of display, which contributes almost 60-65% of the bill of material, has been increasing week on week. So it's a mixed kind of a bag.
Okay. We'll come back to you more for regional variations. Atul, what is the sense you are getting? Anuj, what is the sense you are getting in terms of the second half? Will inflation being behind you be a help, both in terms of margins and in terms of volume, because you don't have to raise prices?
Absolutely. So no, I think, like I said, that's the good news. It will help us. Coming specifically to margins, I think it's a function of two things, right? The cost side challenge is over, so we're not getting hit by cost. I think we do need to see some traction on sales because there is right now unhealthy discounting because of competition, because you're facing this headwind. I think as the demand comes back, some of that desperate pricing that some players indulge in that kind of distorts the market, that should go away. And I think the margin should therefore come back more driven by demand coming in, both because pricing sanity should return and the operating leverage should kick in. So, and I'm very positive on both of these factors. It's just a matter of time. Okay. And we might be surprised on the upside when that kicks in.
So margins would be better than last year, you think?
I would hope so, clearly. On a full year basis, yes. I'm just waiting for the timing when that kicks in. When that kicks in, I think it will surprise us positively.
Okay, surprise positively. But, you've been speaking about demand will recover. It is still in the future tense that at least you and Mr. Jagannathan are speaking. Mr. Atul Lall is a little more confident, at least with respect to washing machines. But this will come is still a little troubling because the past numbers, lagged numbers in GDP are not giving us much enthusiasm about consumption. So I would like confirmation on that. Yes, Anuj.
So no, actually, I want to make a point, and the GDP is not the right metric to talk consumption because GDP is aggregate data based on what the company or country is doing. I have been tracking for the last 3 quarters the employment data, the unemployment data, the household savings data, etc. I think when you start seeing an uptick in that, that's when you'll see consumption return, not GDP. And I will tell you the signs are positive on that, but we're not back to 2019 levels, which is why I'm a little on the fence. I think we're just on the cusp of hitting 2019 levels on these metrics, and that's when you'll see consumption come back.
No, I take your point entirely that the GDP envelops too many things into one consumption number. And that is why it is always good to get anecdotal evidence from people like you who have, who are closer to the market. Akshay, your numbers are extremely painful when you look at the April-May numbers. Would you attribute them only to overstocking, or do you think there is a pain point over there? Demand is not where we would like it to be.
So there are two things, Lata. So one is there has definitely been overstocking in March, which impacted later. The other thing is actually a consumption-driven lever, which is weather itself, which did not play in favor of the summer products. I think that clearly has impacted. Now, in terms of classic demand, right, I think one of the key factors you need to understand is this year consumption is on a very high inflationary base of last year, where food inflation was at record high, and hence consumption and spending on everything else around that also was tempered down. However, this year, and I all the senior gentlemen have actually already mentioned that they expect demand to pick up, and I kind of resonate with them simply because I can see that food inflation is definitely going to go down, and it's obviously going to leave enough income in the hands of consumers. And I think that's going to play a very, very critical role in terms of being able to drive consumption even for this sector. And a big trigger that is coming up, and while I say festival season, I think what we have not realized is India, has its own equivalent of a Black Friday, which is your Independence Day, where we actually have, it's almost a festive atmosphere on the retail side, where there is huge demand spikes that actually come for consumer durables. And I would imagine mid-July onwards, you will see heavy stocking on a lot of consumer durables in secondary, especially secondary sales will be pushed through heavily at that time. So I would imagine 10 to 15 day lead cycle for primaries. So
got that.
July can track that.
When you said unusual event, I thought you were referring to the election year and whether that will mean more income transfers, because that's the trend we are getting from state governments. More income transfers, at least to the lower levels, free public transport and free electricity units, all of which should encourage more consumption. Actually, in Karnataka, the Congress leader actually said that he is trying out a Keynesian economics of, probably cranking up the economy by trying to increase demand. Mr. Jagannathan, just a final question, since you've seen the consumer market for the longest period among our guests. Are you getting a sense that consumption is back to the robust days, or is there still a far cry from the rara days that you used to see?
A very far cry.
Oh, okay. So the GDP numbers were not wrong after all. Anuj, what would you say? I mean, are we very far from really good times that you have seen?
I've not been in the industry as long as Mr. Jagannathan, some of the others who have seen those cycles. But I do think if you're looking from a longer arc, the last 3 years have been the most volatile that many of us ever have seen in the sector.
That's why I'm asking you to compare before the 3 years.
Yeah. So I think if I just, I think our prism is becoming shorter and shorter. If I just look at the next 6 months out, re-say that we are probably headed for better times than we have been at any point in the last 2 or 3 years.
Oh, good. That's great to hear. Concluding thoughts, Mr. Lall? I mean, in terms of how you see the remaining part of FY24.
So undoubtedly, it's not those super buoyant days. It's no that. For certain categories like wearable areas, because there the market is just opening up. So it's normal kind of growth. And what is positive is that it's coming back to a decent growth. Now, entrepreneurs are always optimistic, and we are dependent upon the brands in Dixon's case. So we are happy. We are satisfied with our order books for next couple of quarters, and the build-up for the festive period looks good. Our sense that we're getting after talking to our brand owners is that the tertiary has started. Now, these are all positives. So we're keeping our fingers crossed that this festive period should be good for the industry.
That's very good to hear. Actually, it's positives coming from most of you. Yes, when we compare to the rara years of perhaps the first decade of this millennium, things may not look as good. Those were huge growth years, but maybe we could be on the cusp of that later on in this decade. For the moment, we are going with positive takeaways from all of you for the upcoming festive season. Thank you very much for joining us in this survey of the consumer sector. That's it on this edition of Indianomics. Thanks for watching.